All right. Hello, everyone. Welcome to the next episode of the Restoration Success Show. Today we got Mr. Rosebrook with us today. How you doing today?
Hey, fantastic. Thank you. Pleasure to be here. Thanks for having me.
Yeah, no problem, no problem. For everybody, you're pretty well known in the restoration industry, but I'm sure we'll have some newer listeners that maybe haven't come
Mm.
across you in the past yet. So just kind of give us a brief intro to how you got involved into the restoration industry.
Sure. Yeah. So back in 1988, you can age me really quickly. My father bought a restoration company. I was a senior in high school. And so, like all rebellious seniors do, I spent my very first week in restoration was the spring break, 1988. And I was cleaning walls, extracting water, and learning the trades. So spent 10 years in the restoration industry, just actually working in the trenches, working in a company, sitting in nearly every seat. So I started out as a technician and then worked up to managing departments, whether it was floor covering or managing the water damage contents cleaning, the cleaning. They kicked me off the construction crew. I just don't have the aptitude for it, but I had an attitude for it. It was good. Anyhow, so I did everything except for there's two positions I didn't fill. I like to say the first was the bookkeeper, and I really wish I had. Would have been good to learn that from kind of like behind the keyboard type of a role. The second one was mold remediation because back in the early 90s we called that demolition, so it didn't exist. My father sold the company in 1997, and at that time I moved off to Colorado, worked with Rocky Mountain Catastrophe at the time, and my father took a road trip. He was trying to figure out what he was going to do with the next chapter in his life, and he drove from Oregon to Michigan, stopping by restorers along the way. He had this premise before he left that restorers needed someone to talk to who'd been in their shoes. And so he stopped by probably a half a dozen, or probably a dozen restoration companies. And when he came back, he hung up the shingle because he was right. Yeah, this is a complicated industry. And so he founded Business Mentors. I think it's 28 years ago this month. It was in 1990, October 1997. And so he was a businessman, not a restorer. He bought a business company, bought a business restoration company. And so when he would go out and give these restorers a plan, and they would say, "This is great. Okay, how do I do it?" He was the businessman, and he'd always say, "Well, I hired somebody." But then he would call me at night and he would say, "Hey, I got this client who has this problem." And he'd keep talking through all these people. He was trying to get me a job in the Midwest somewhere. And I'm a West Coast guy. I wasn't going to move to where it's cold and, different land. So I'd answer his questions. And at some point, when I was trying to figure out what I was going to do with the next chapter of my life, I wasn't content in Colorado. I had met a girl in Oregon. I wanted to go back and see about that girl. So trying to figure out how I was going to move back home and what I was going to do. I decided to jump on board with him as his partner, and I became a 27-year-old business consultant. So I spent the last 27 years traveling around North America, helping restoration companies create a vision and a plan for the company, and then help them execute that plan. So that's my story, kind of in a nutshell, although it was a bit long.
Yeah, no, I appreciate that. That's an interesting way to, yeah, I mean, you got into it young too. Your dad was
Mm,
he forced you into it early. So before we
right.
get into what some of the successful patterns are and things that, some of the companies you work with. I mean, you've probably seen a lot in a lot of different markets, different weather patterns, different
Mm,
demographics, populations, because what we've seen is, all of those definitely come into effect when it comes to scaling a restoration company.
yeah.
But is there like, a big, a commonality, like, all right, typically there's these three things or whatever that, mistakes that they make or things that they're blind spots, I guess, if you will. Is there anything that stands out to you in the back of your mind that you've kind of noticed over the years?
Sure. I'd almost like to take that from what is the characteristic that ties the successful ones together, so you can see when that's missing. So I'll start with that and say, okay,
Yeah.
the number one. So I spent some time early on, probably 10 years in my consulting journey, and I kept thinking about what's the difference between this one company in a market that might be similar to another company in a similar market. One's successful, one's not. And I'm trying to tie and weave together what is that element. And the first thing I was thinking, it was funny that the first my first guess was the companies that really grew. It was because the owner was really involved in marketing and growing the company, and they were involved in the whatever outreach it was. But then I started digging a little deeper, and I realized that that was an element or characteristic of an exceptional leader. And out of every one of the companies I worked with, if they were struggling, it was because the owner really had no solid basis or foundation in leadership and leadership skills. And the ones that were really exceeding, it wasn't that they were marketing. Marketing was a part of an element of being a really, really good leader. And so part of it's having that vision, it's having that clarity and mission. It's being the kind of person that people want to follow. And so the first thing that ties all these people together was solid leadership. And the thing that maybe that the other companies were missing was it was a lack of leadership. And it wasn't that they weren't good people. It's just they didn't have this clarity of vision, this clarity of direction, and maybe they just didn't have the type of personality that people wanted to line up behind them and follow them and say, hey, or even push them forward. Like let's go, let's take this. And so leadership is an element, and so that gets into some of these. We'll go back now into your question, which was some of the problems. And the first problem you find is being very reactive, not having a plan. And so what happens is the owner and the executive team, the managers, whoever it is, they spend their day reacting to situations, stimulus, and problems, and they become driven by somebody else's priorities. And then at the executive level, it's like, hey, this is a great idea. Let's go start this. And they go start it. And then they realize this is hard. Maybe it's not working. Then we undo it. We go back like, no, it's because we're going the wrong way. And then we move this other direction. And they start taking steps and go in that direction. And so their priorities within their organization are driven by somebody else's crisis, not by deliberate action or at least a definition of where they're going. And so there's that's probably the first one. And the second one that is a big challenge is companies don't understand how to preserve cash in an organization and how to drive profitability. And so let's say you take a job that's 10,000 or 100,000, whatever it is. There is a certain built-in expectation on profit margin on it. But if you don't have a plan on it, you don't budget, you don't schedule it, you don't plan on it, or you don't finish the job on time, you let it drag out there forever, all of a sudden you had what could have been 5,000, 7,000, $50,000 worth of profit in your company, but I didn't manage the job. And so I just let it all slip through my fingers. And so without the lack of profit, I don't have a vision on where I'm going. And then what happens is now you start having lots of, let's say, lack of clarity within that executive management team. Everybody is confused with what they're doing, or the best people are working their butts off, carrying water for everybody else who's not working as hard, and they get burned out. And so you end up with a lot of starts and stops and misdirections, and that it all goes back to lack of leadership, lack of plan, knowing where we're going. So if we have a plan, then we can figure out how to get there.
Yeah, and sticking to the plan is
Yes.
I mean, it's because I don't know if you're big on like personality tests and all that, but we've like I've taken some, we hire based on them, and a lot of entrepreneurs, business owners, I mean myself included, right? We're like high quick start. We love new projects, new strategies, new things. And then once you try to implement it and you're bored 2 weeks later, then I mean, but that's not, you're only hurting yourself if you
Yep.
but I think all entrepreneurs probably have to battle that to some extent. But no, I agree. Are you familiar with the entrepreneur operating system, EOS?
Yeah, EOS. I actually have the books up on my shelf behind me here. So I'm a big fan of it. I just think it takes. So we talked about the strategy being important, like going and developing that. So I like how they made it really simple to create a management plan in your company, whether it's to define your core values, to kind of define the basis of what your company is before you define where you're going. That's really important. And then also aligning in that core values, the gets it, wants it, has the capacity, JWC, creating that alignment with all your employees, saying, do they fulfill our core values in our company? And now we go back into managing people on that. And then also taking, no matter what you call it, taking a long range plan, my 5 year, 10 year plan, saying where am I going, and then ultimately breaking that down into a 90-day action plan that says if I follow my 90-day action plans and I continue to execute those, and I not only follow them, but on a weekly basis, I'm sitting and trying to track progress on what I'm doing. All those elements make the EO system a really good scalable system for a company. I don't follow it strictly for a number of reasons, but I use a sort of a quasi part of that, or maybe it's a Rockefeller or scaling up. So they all kind of build off of simplicity in where's my company going, what's my plan, and then pull it back into the execution steps to get there. And so, one of the things you mentioned about the personality types, I think personality types is important. And let's say a symptom of not having a real strategy on that, as the owner or entrepreneur, a lot of times we end up hiring ourselves. I like this guy, I can work with them. And so what you do is you double your strengths and double your weaknesses. And so understanding how that people have different personality profiles, and certain ones are good for different positions. So I don't want my CFO to look like my CEO. They really, or just my finance team to look like my executive team. What that ends up doing is creating a lot of risk within your company because you don't have balance, and you've hired people with the wrong skill set for what they're supposed to do, marketing people to get bored versus a finance person that needs to sit there and not really talk to people. And so I think that all of those things, yeah, definitely play a part of it. And if I might, I had one client that used it really particularly well, and she used the basic disc profile. I have some companies that use caliper, which really it gets in depth on some of the stuff. It just takes a long time to fill them out. If somebody's going to dedicate an hour to filling out a personality profile, you better know how to use it. So
Yeah.
this company, she was up in Calgary, and what she did, every single meeting they had the disc profiles, and every single meeting, whoever was going to be in the meeting, they listed them as the people who were in attendance, and it listed their personality type. So it kept bringing it back to forefront of knowing who you're meeting with. And we ended up doing a workshop once where they broke out into groups based on their disc profiles, and then they all came back at the end of it. The result of that was, here's frustrations that we have in our organization on how people communicate with us, or in things we see in the company that we constantly that we encounter, that challenge based on what our personality type is. And so it was a way for them to all acknowledge it and to always see that, and then to see the other person for their skill sets and what ways they desired to be talked to. And when it's always put in front of them, it always keeps, let's say, driving execution to that. So that was the best way I'd seen it used, and I do like it. I'm a big fan.
Yeah, uh we use Disk and Kolbe A are our two big ones, and I mean now we require it because we kind of you touched on this a little bit, like we have our core values, we want team alignment, we try to keep our culture tight, and an interview, like if you people are going to tell you what you want to hear, right? And again, I'm not to discredit anybody, but it's not a bad idea to kind of look under the hood a little bit to see
Yeah.
what is their default operating system, right? Like internally beliefs,
Yep.
the way they are. And it was eye-opening for me because like you said, and for anybody listening too, even if you have an HR manager, whatever, they're typically going to tend to lean and like people like them. So you have to keep that in mind. You need to be aware of that. We've made the mistake to what you said. We all do want to hire our duplicate, replicate version of ourselves,
Yeah.
but a lot of times it's not what you need. And I agree with what you said, like whether it's EOS, scaling up, I mean, there's 10, 20 different, business operating systems out there. But at the end of the day, they're kind of, have your mission, vision,
Mm.
values, your goals, reverse engineer it, break it down quarterly.
Yep.
I mean, do you break down monthly, weekly? Who's in charge of it? When's it going to be done? Let's revisit. I mean, they all kind of flow into that and they just call it different names. But I
Yeah.
think getting in the rhythm and consistently sticking to it. Um, because like you said too, we see this with our clients, like the more proactive ones, the ones, thinking ahead typically, I mean, do better. Because here's what will happen. you're supposed to meet with the team for a quarterly meeting to review all this plan, and there's going to be a fire going on, or maybe literally a fire at a new job, or
Yeah.
hypothetically, there's going to be a problem, but like you have to like you can't just keep kicking that down the road because then a quarter goes by and you're like, well, we didn't even review where we're at. Um,
Yeah.
so I agree with all that. It's easier said than done too, I think, is where some people, and this is probably what you help your clients do, is force them to like, no, like we are zooming up above the business. Let's look at it. Where are we going? And I mean, you force them to be proactive, right? Because otherwise we all can make excuses, all day, every day to, oh, well,
Yeah.
next week I just had a flood come in last night. I got to deal with it.
Yeah. Well, and that didn't change. You got new things that came at you. It doesn't change what you still had to do during the day. And so one of the things, actually, I was at a trade show and had a prospect talking to a client, and it was interesting to hear it. He says, that stuff that you need to do in your business, and the prospect says, yeah, I do. And he looked over at me and he says, hire these guys, and now you got to do it. So sometimes it's having an accountability partner, or knowing what the first step is that you take. That those problems are always going to come up, and at scale, one of the easier solutions I found at scale. So you have to have, now you got 10 managers at different levels in the company. They had two levels of leadership meetings. One of them was the executive leadership meeting, which was done probably every other week. And they could all focus on those issues because they had the operational people out doing the jobs, handling the crisis and the fires, where the executive team could really focus on long range planning. So, if you're a small guy and you're doing less than $5 million, you don't have multiple levels of leadership. You've got a couple people, and you're just busy. And I think the challenge is, when in our business, we used to do our leadership meetings on a Saturday. I hated it because I was a 23-year-old kid, and on a Saturday, I'd rather be doing something else besides sitting in a management meeting at my dad's house with seven of us there talking about where we're going. But I could see, there's just got to be times or places you can do that. And when I became a business partner with my brother, we decided that we would do our leadership meetings sitting out at a bar. So we could go to a bar, have a good beer, a dinner conversation, and it just didn't interact. We could be away from our families. They knew it, and we could be away from our business because there was no calls coming at us in the evenings. So just making sure that you dedicate the time, be consistent with that. And outside of a true crisis, might be a good chance for you to delegate to people and see how they do with it. Say, we got our meeting. We're going to be tied up for 2 hours or four. Probably it should be longer than 2 hours for a weekly meeting, and it probably should be an hour. And so people can handle things for an hour. If you start your meeting at 7 in the morning or 6, whatever it is, you'll be able to finish it up before the crisis of the day hits you and you have to deal with it. So be attentive to those. That's a really important time.
Yeah, no, I agree. That's 100%. And if you're going to delegate, responsibilities, I mean, at some point, it's like you got to let them, they need to make the decision themselves, and it won't always be right, but that's how they learn. And it's like, hey, maybe next time consider this angle, but now right? So
Yeah.
yeah, there's a lot of good benefits from that. What because I know you love to zoom up, and look at the industry as a whole, and then kind of what's happening. You've done this a lot in the past for CNR magazine and all that. We're kind of, well, we're in Q4 of 2025. It's been an interesting year.
Mm.
Like what's on your radar? What are you watching as far as, the industry? Like what are you seeing? Like any developments in quarter 4 that are different, or like where are you seeing things trending? I guess, like, what are you paying attention to?
Yeah.
What are your thoughts, I
So
guess?
so Q yeah, Q4, just a continuation of a lot of what I've seen. One of the things that's really interesting, I spent some time, there's a website out there. It's called Spaghetti Models. I think it's Mike's weather page. And so I'm watching developments in the Atlantic, and just seeing everything's turning away, and there's so many companies that have kind of developed this need for this catastrophe. I built an overhead around it. I've got a system around it so I can respond. And there's going to be some companies that might be hurting. There's going to be some companies that maybe there's going to be some equipment sold at some discounts. There is, every week there's another hurricane forming out there, and there's a force field around the East Coast right now, and it's just pushing things off. And they're going north and east as they approach the Caribbean. So I don't know what's going to happen from a hurricane standpoint, but it's going to impact some of the bigger players who are depending on that, and they're probably hurting right now. The claims have been down every single every month they've been down, except for some catastrophe events in the industry. Probably, from what I've seen from some presentations done by Verisk that was in the summer, but every month it was down 30% versus the year before, except for a couple outliers, which were catastrophe based. So a lot of the everyday claims are being are being driven away because of fear of catastrophes. And those catastrophes come in, the insurance companies all of a sudden get back to, wow, this is overwhelming. We've got so much. We better raise premiums over here on the other side, and deductibles better go up because we're going to have catastrophes. And so claims are down, everyday claims are down, and people are generally hurting. If they're doing what they've always done, they're getting 30% less of what they used to get. And so I think what we look at currently for the end of the year, it's really hard to build a marketing plan in late October because you're just coming into the holidays. People are kind of checked out of the insurance world. They're, one of the cool things, I actually liked going out and marketing the holiday weeks because a lot of times the person whose name was on the door of the brokerage or the insurance office would send his staff home and sit there at the desk and hope to talk to clients, but they're kind of bored and they would talk to any vendors that came in. So it's a good
Yeah.
opportunity if that's my vertical, if that's what I'm doing. And I think you'll see some of that maybe in the property management world or wherever you're going to. So I guess the couple things I look at, claims are down, inflation's still up and it's going up higher. The everyday prices like food prices and living prices that people are going to have to deal with. And the gas prices are going down, everything else is going up, and that's there's a lot of contributing, complicating factors to it. But the contributors to that just haven't changed. And so being tariffs or high wages, or if you're dealing with your employees who are just struggling. If you looked and saw that 60% of the country is living paycheck to paycheck and doesn't have $400 for an emergency expense, as a business owner, you have to realize that 60% of your employees are probably in that boat as well, or maybe it's 40% because you're just in a different world. All of those things become contributors to other problems in the company. And so I guess as the owner, you just have to be aware of that. You have to be aware of the real people problems in your company and the stressors they have outside of work that maybe impact them at work. And so part of it is, yes, have some compassion and understanding, but also make your workplace a place where people get to escape the outside world and be at a place where you get to serve others and provide help. And so that's, I always find that, coming back to the purpose of restoration, which is a really kind of a cool calling. We restore lives and livelihoods of those people impacted by a disaster. So when we're on a job site, know that we're serving people in a time of need and providing a real vital service. And so I guess contributors in year end, I'll sum it up and say claims are down, costs are up, and your competition is up. And in some cases, they're not desperate, but they're aggressive, saying I got a payroll to make, and maybe I have some new competition out there. So all these things are going to impact people's businesses. And first of all, be deliberate about it. Protect your capital. Protect your margins. Focus on cash. One of the things that we'll see that we saw last year in the State of the Industry report put out by Know How and published in the Cleaning and Restoration magazine was the cash. People are struggling with cash, and that it's tough to run a business without cash. And if I'm going to go borrow it from a bank, the cost of borrowing keeps going up. We might have a dip in interest rates for a little bit, but they can cut short-term rates, but they're not cutting long-term rates. That's determined by the market, and those tend to be pretty stable and maybe heading up. So that given that, focus on cash and focus on your collections. And I would say that people are they're upset that the insurance companies aren't paying, or they're upset that whatever those inputs that we're just not getting our bills paid. The reality, what I've seen is people have really bad internal process and systems, and they're not billing their jobs. They're not putting an invoice out. They're not doing follow up. They're not calling people. They're not giving them some reason to send that bill out. And so if I'm an adjuster and I have 35 claims on my desk, and it took you 3 weeks to get me a bill, I've got to stack this high. I'll come here, stack this high, and that bill goes right here at the bottom because you took 3 weeks to get it to me. But if you get it to me within 24 to 48 hours after completion, I'm thinking, hey, I can close a file. I'm going to write a check really quickly. I'm going to close it up. I'm going to send off the check. I'm going to go back to the top of my stack. And so I think those are some things that restorers need to be looking at and focused on. Focus on cash, focus on the value, focus on creating great leadership and the culture in the company that really engages your employees, brings them a part of your company, a part of your mission to serve the clients and to make a difference in whatever workplace you're in. And so if you can start focusing on those things, I think you can create a competitive advantage. You can have discipline in what you're doing, and you can create success.
Yeah. No, I mean, I agree, because even, I mean, I think it's, some people just lean on, because a recurring theme in restoration is like, oh, I'm waiting on to get, waiting to get paid by an insurance company. I mean, it's like, well, yeah, you and everybody else. Like, it's not a new thing. And to your point, I mean, we've had clients that are like, dude, we have that dialed in. We're going to get paid. It's not a big deal. Like, to your point, they've already, like, it is dialed in. They have their SOPs, processes. They're following up. I mean, you know what I mean? It's just dialed. And there's some people that's like, well,
Yep.
they haven't sent me the check. And it's like, and that's not typically what we've seen. That's not the only process they don't have figured out too, right? It's kind of a sign of other thing. And again,
Yeah.
we've all been there. It's just, you have to clean it up, and because yeah, that's just part of it. But I mean, sometimes it takes, when things, whenever things are this uncertain, I mean, all of those things you said would probably be things that we all as business owners should be watching regularly. But, sometimes it takes, the wheel has to get squeaky enough, right? Before you really like, all right, let me, now that the bank account is this low, let me actually get my cash flow down. So
I'm going to make a point on that, on cash flow and collections. So I was talking to, I'm going to go ahead and I'll list the name of it. So I was talking to the head of Alacrity, John Miko, about 2 weeks ago, and he was talking to me about the financing that restorers are using, the problems there are for them, and I said, if we got our money quicker, we wouldn't need to be going out and borrowing money and putting our funds at risk through just our line. So we're collateralizing our accounts receivable. I said, we wouldn't need to do that if we got paid quicker. He said, do you know that we pay our bills within 48 hours of receipt of an invoice, and we do an automatic deposit into their account? And I said, gosh, you know what? I didn't know that. Now, there's going to be lots of people out here listening to this saying, but they this and they that. There are all the buts. And I agree with all of those things. The point was real, and it made tons of sense at the end. He said, do you know why most of the time restorers don't get paid within 48 hours? I said, nah, try me. He said, they don't ask. He says, we pay a deposit. We pay a progress payment on larger jobs. We pay at the end of the job. We pay promptly when notified that money is due. So it goes back to systems and process internally. And, we focus so much on getting the job done, or maybe getting more work in the door, that we don't wrap them up quickly. And there's just missing elements in there. So before you challenge my statement of they this, they that, everything else, make sure your systems are dialed in. And when it can work, as often as it can work, and as often as you get clear communication and you get agreement on funds and all the other stuff, as often as you can, submit your bills, get paid within 48 hours, use your systems that you've internally got or can define to make it better. And then once you realize that there's things that are out of your control, then start complaining. But don't complain first. Fix your stuff, get it in place, make it better, and then let's work on where the systems outside of our control affect our business.
Yeah, no, I agree, because, you know, everybody's like, "Oh, I hate TPAs." Some people are like, "Dude, we don't mind them." Like it blows my mind the amount of like just things around that. But I agree with you because we some of our clients are, dude, we make, and I mean like literally millions a year from some of the alacrity. I mean, they're like, now they end up, they work with us because they want to diversify the revenue streams, right? They're like, yeah, we're
Yeah.
not solely going to rely on them, but like, dude, we again, they're like, dude, we have it dialed in. And again, and I think the point is they're not perfect, but they're like, it's a great revenue stream, so we leverage it. But again, we're not solely going to rely on it. I mean, some, I mean, but they're also the
Yeah.
companies that have everything else dialed in. They're like, dude, this is part of the
Yeah.
game. We got it. And there's some people
Yeah.
out there being like, "Oh, I'll never
Yeah.
work with them," and it's like, dude, you never even have. You've just been reading all these comments and about how much people hate them, so you decide to hate them. It's like, I mean, literally, there's
Yeah.
people like, I've never, I don't know. It's that was interesting. I haven't heard that though. 48 hours. He's kind of
Yeah.
like this. We pay our bills,
Yeah,
so
I'm not going to defend TPAs because they're good and they're bad. I'm only going to say that some people make it work. What do they do to make it work? Some people have been very successful by not working with them. What do they do? Pick your lane, figure out where you want to be, and be good at what you're going to do and what you're going to be. Don't sit inside a glass house and throw stones, or sit outside a glass house and throw stones at it. Be aware, make deliberate decisions, be intentional on what you do, create a plan to be successful within whatever model you have, and know that the marketplace is changing. And the way you got work yesterday is not the same as the way you're going to get work today. And the way you're successful yesterday is not going to make you successful tomorrow. And so, one of my father's favorite books, I like it because of the title, but Marshall Goldsmith wrote a book called What Got You Here Won't Get You There, and realizing that all the steps that got you to the point of where you're 5 million or 10 million or 1 million or whatever size you got to right now, you can't just double that and get to twice the size. A lot of times there's other elements in there that are going to drive that or make changes and make it more difficult to do what you previously did and get the same results. Or maybe you got the results you did and it wasn't because of what you thought it was something else. And so just to that's where the strategic discussion gets in, and saying, okay, what are we going to be? What are we going to be when we grow up? You don't raise adults, you raise kids and they grow to adults. And we don't raise a $50 million company. We raise a $1 million company that grows to be whatever size you ultimately want it to be.
yeah. No, I love that. I think it's at the end of the day, it's kind of taking like, yeah, where are we trying to go? What kind of services we're trying to focus on? Maybe
Mm-hmm.
TPAs help us get there, maybe not. I mean, we kind of approach, the online digital marketing the same way. It's like depending on their goals, their services, sometimes we're like, hey, this particular service might not be the best fit to get you from point
Yeah.
A to point B, right? So it's like, hey, let's remove that piece, insert this piece. It's not necessarily a one size fits all, right? Because there's a lot of
Yeah.
variables. So no,
There are.
I
I'm going to share. So I learned something. I learned something here recently. I'm going to share with you. And this is good for your business. I was talking to one of the heads of one of the private equity companies that's rolling into restoration, and I was surprised to hear that most equity companies value sales coming from the SEOs and internet and direct leads at a much higher value than they do the organically create, not organically, the internally created, or whether it's the vendor relation, whatever programs. So there is a premium on those type of sales, and I did not know that. That was that kind of changed my view of that. And this is new. This is my new world. So that was probably 3 weeks ago when I heard that, and it surprised me because I thought revenue and margin was revenue and margin, but there's different premiums placed on that. So surprising.
Yeah, no, I mean that is interesting here. I mean, I have my thoughts on why. What did he say? Why, like in particular?
They figure it can be scaled really easily. You
Yeah,
can scale to a different marketplace. You can scale, and so that's why it's not about what happened in that company. It's about what could happen in the future. And so I don't.
yeah,
Again, I don't. Success is going to breed success somewhere else. And I look at ease of cash generation and margin on the work that I'm bringing in the door, and that's where I want to be able to scale whatever it is. But It was interesting. I just find the closing ratio is lower. The types of job tends to be smaller. There's a whole, it's problematic, but it's good at the same time. So,
Yeah, and I
you've
wouldn't
got to
argue.
be, yeah, you got to be deliberate on what you're doing. And you have to, like, we're going in this lane and we're going to pursue this and do it, or we're not
Yeah,
going to, and we're going to go somewhere else. But we don't start it, stop, do this, something else. Be really focused and consistent on what you're creating and doing.
yeah. No, I mean, I'm glad you brought that up. I mean, based on, I mean, I've had a few conversations, with different private equity companies myself. And again, they all have their own buy box, right? I mean, some people won't even look at it, unless it's a $50 million, 100 million. I mean, they don't even look at it. Like there's levels to the game, right? But a commonality,
Yeah.
and I think that's what you and I like, we try to look for in these conversations is like it's called single channel risk, right? Like if you just are
Yeah.
sitting here waiting on the next referral to come in, they're like, dude, why we can't scale that. That's like there's no you know what I mean? They're like, I mean, again, would you get paid on it? Yeah, but like if you want your multiples to go up, that's why I think they probably like the digital marketing piece because it is not perfect. I don't want to sit here and be like, oh, because it is not easy. It is not perfect. I've been doing this a long time, but when dialed in, they like that, and they're probably willing to pay extra multiples for that because you can turn the dial. And that's what they're
Yeah.
like, dude, we can take this national. Like again, it's whatever their goals are, but they like
Hmm.
it 'cause you can. They're like, wait, if we put in a dollar and get five back, like where else are we going to do that? Now
Right.
doing that consistently and at scale, whole different conversation. It's not easy. I don't want to sit here. But that is interesting because I've heard some of those conversations too. But then some of those, depending on the market, there's a cap to it too, right? You can only scale it so far. And that's
Yep.
where we start. And we call them fishing poles. You put more poles in the water to catch fish. We try to simplify our our lingo.
Yeah.
But that's where we get to, and that's why we talk to a lot of our clients too. Like, I mean, we only really help with the online thing, but we're even like, hey, what are you doing for the offline marketing channels,
Mm.
right? Just to kind of like, we want them to be successful. We want to open their eyes to there's multiple ways to bring in leads and jobs. And before we wrap up here, because I heard you touched on this earlier, you have experience on rolling out like marketing referral platforms, I guess, whenever somebody's opening into a new market or something. I mean, is there like, I mean, obviously there's a lot that goes into that, but is there like kind of a quick highlight
Mhm.
bullets, like roadmap, like, all right, we're going to do these, property managers, plumbers, referrals. And again, I think that varies by market based on what we've heard. Like some people, there's some people love plumbers, some people hate them. I'm like, dude, I've heard it all there too. But you know what I mean? Do you have like a
Yeah.
playbook or like just a bullet point of what you've seen work best when it comes to that?
Yeah. So the first thing is there's lots of differences between markets. So I'll tell you, talk about plumbers. I love the model of plumber leads and referrals because it gets me mitigation jobs. It get consistently emergency service, high margin jobs, all that. But in some markets I'm going to go into, and it's $1,500 or more per lead. And if I don't bury that into the job, how am I going to afford to do that? I talk to some people, it's like, oh, it's just cost of doing business. I'm like, well, what happens if the job's 3,000? You're still paying 1,500? Yeah, but there's so much margin in mitigation work. Like, you don't understand your costs. There's a lot of costs on your mitigation work that don't actually hit the direct cost on a job. It's my cost of my equipment, it's my training, it's my 24-hour staff, it's on and on and on and on. And if I start bringing that in there, I don't have that much money. And so part of them have to look at a marketplace and say, what is this marketplace giving me? And so I like verticals that say, okay, I used to always like the groups where I was the only restoration company and there was a need for my service. And so I'm always going to try to go out and find those groups or areas where maybe other people aren't. And one of the things I like the idea of creating verticals and vertical marketing within a company. So I want property management, I want schools, I want healthcare and hospitals, I want hospitality, so figure out what it is, and then if I can find somebody who knows that world, property management company, somebody who knows that world, who is looking for a job and bring them in to my team. So I've got their years of experience in developing a marketplace and knowing people, and I can then quickly get them up to speed in a shorter period of time. That's first place I'm going to look. And so I'm gonna try to find people that specialize and really be deep into a different vertical just through being deliberate and having a plan and doing some sort of a follow-up. But then whatever I'm doing, I've got to have a solid plan. If it's a plumber program, what am I giving the plumbers, and why would they work with me instead of somebody else? Because they have options. Property management company, what am I going to do that makes me a better choice than my competition? And I'm going to go down each one of the verticals and have that reality and say, I'm good at this, I'm going to get more of it. And then I'm going to leverage that. And who are the people in that vertical that know somebody else that I should be working with? So my clients that love me, how do I leverage them to get warm calls? And so some of that, to the referral programs, there's lots of great tools and resources out there. And I'd say don't do it without a real good plan that here's what I'm going to do. And when I told people I'm going to do it, now I know here's my make sure that it happens type of thing. If I have a plumber program and I say I'm going to give you $1 per lead, I better figure out when I get that lead, you're getting your dollar. And dollar's not a realistic number, but so now just make sure it's fit within a plan, and that you have some process or research for it. There's lots of referral partners out there that can help you facilitate that. And so, just seek those out. I'm not going to endorse any of them right now, but just make sure that you have some people to give you that feedback, give you those tools and resources to make sure that you're executing what you said you were going to do. And go into it before you start. Spend the time building your model of this is what I'm going to do, and this is why people are going to refer me, and then be disciplined about following through and doing what you said you were going to do. And then I think the other thing, whatever you're going to do, one of my theories on marketing is getting a new claim from some vertical is relatively easy. I want to get on TPA programs. I want to get this property management company. I want a plumber lead. I want whatever it is. It's relatively easy. You define a plan, you execute the plan, and then you spend the time to do it. And the easy part means the process is easy, but it might take me 6 months or 6 years. The time is the element that maybe is the unknown part of it. But then the real challenge is to make sure that the work you do is good, and that people are going to call you back because you spent a lot of time and a lot of effort to make that phone ring. And then if your production teams fail on it, then all of a sudden, you got to spend 6 more years, or actually getting the work the second time is not easy. If you fail, you're not likely going to get that back, especially early on in the process. So make sure that you're dialed in on your production process systems and quality control.
Yeah. No, I agree. I think at the end of the day, everybody could probably sit down and map out a pretty good plan on like, all right, I know I need to, do
Yep.
this many calls, emails, drop-ins, whatever. But I couldn't agree more. Consistency is key. I used to work for a subcontractor, and I used to call in general contractors.
Mm.
And I worked for a manufacturer's rep calling on contractors. Kind of like what a BDM rep would do for stores.
Yeah.
The best thing my boss did was he set the expectations. He's like, you're going to do this for a year, and you're not going to worry about how much money you make or how many jobs. He goes, you will just be pounding this for a year, and then you won't have to work. He called it. And again, because he
Yep.
says he didn't say 4 weeks. He goes a year. And then, like, to your point, after that, I had a handful of relationships. Never had to wonder where a job was coming from again. Because again, to your point,
Yeah.
I just consistently did it and didn't stop. And again, I didn't have a choice, so I think that was good too. But I
Right.
think setting
Exactly.
that
Yeah.
expectation, and he just said like, "This is what you're going to do for a year, and then we'll reassess at the end of that time frame." And see, we already had other people in the office too. Like, you just look like, dude, if they've been doing this, like, if I just follow their lead, like I know it'll work. So I think that sometimes there's a saying I love. Sometimes we need to be reminded more than we need to be taught. And I think
Mm.
that I don't know. The more I'm like, we all kind of know what we need to be doing. It's just like we need to be reminded, like, hey, you're
Yeah.
losing focus. Kind of like we talked about in the beginning. Get back to the plan. Get back to the vision. The vision. Or what
Yep.
you're working on, is it getting you closer, or moving you further away from that, right? And that should be your kind of filter. Um, Well, this has been great. If anybody wanted to learn more about you, your company, and kind of like how you help restores, what's the best way for them to get a hold of you or reach out?
Sure. I have two. So first of all, my email, it's Philip with two L's, Phillip at businessmentors.net. Philip at businessmentors.net. And they can also find me at that URL, businessmentors.net. I also have a kind of a virtual program where we've got some packaged training programs and some marketing resources at restorationtrainingonline.com. Restorationtrainingonline.com. So you can go to either one of those sites. They can you check us out, or they can contact me directly, and I'll talk them through what we have and what our options and opportunities are.
Awesome. Well, that's it, everybody. That's today's episode on the Restoration Success Show. Appreciate your time, Philip. This was great and awesome, and we will see everybody on the next episode.